Hello, everyone, and welcome back. Today we're going to be finishing up the second half of Chapter 8. We went through the first half of Chapter 8 on Wednesday. Let's scroll down here and see where we are in Moodle. So once again, remember we're working in these 2 weeks right here, as of right now, to catch up with where we're had a little speed bump in our course due to this virus issue. So we're covering the second half of Chapter 8 today. So I'll be posting that lecture down here in this week. And then early next week on Monday or Tuesday, no later than Wednesday, I'll have Chapter 9 up. That way we'll be at least first half. That way we'll be back on track next week for leading into this week here. So we'll be done with chapter 9 and getting into Chapter 10. So let's see where we left off on Wednesday. If you recall, on Wednesday we left off with the conversion adjustments, other, on slide 13. So we'll pick up on slide 14 here with how we handle internal service funds with dealing with the government-wide financial statements. So internal service funds, generally they're included within the governmental activities. I think everyone understands this by now in this class, as we've talked a lot. The main difference between the two proprietary funds, with the internal service fund and the enterprise fund, is who they service. And we know that the enterprise funds service those external to the government, those people outside of the government, whereas the internal service funds, usually, as they say here, service the actual government functions itself, so other departments within the actual government. So that's why we're seeing here that they're generally included within the governmental activities on the government-wide statements. There is a case, however, that internal service funds can be reported as proprietary funds. The activities accounted in them are usually more governmental than business type in nature. But if enterprise funds are the predominant or only participant in an internal service fund, the government should then report that internal service funds' residual assets and liabilities within the business type activities. And that is from the pronouncement of GASB 34. Okay, so now just like the other day, we have a little bit of some worksheet entries that are going to be included in the governmental activities. If you recall, these other worksheet entries up here, we had these adjustments like for the long-term debt right here, and then the corresponding entries. Well, that's the same thing that holds true with down here with these conversions for the worksheet entries. This slide here is going to correspond with this slide here. So 1, 2, 3, 4 corresponds with 1, 2, 3, 4 on this slide. So the first thing we want to do is add internal service funds assets and liabilities to the governmental activities section of the government-wide statement of net position. And this is accomplished through entering this journal entry right here. As you can see here, we debit the relative assets, in this case cash, due from other funds, supplies, inventory, and capital assets. And notice this is net here. Then we'll credit the accounts payable, note payable, and then credit net position. So once again, that is just the internal service funds assets and liabilities to the governmental activities section in the government-wide statement of net position. So we're just merely copying them directly over at that point. The next step is the income of the internal service fund with entities external to the governmental activities. Those need to be brought into the statement of activities. And most commonly, this is interest expense or investment income. And we can see this is going to be accomplished by the journal entry of a debit to net position and then a credit to investment income. The third step is to reduce or increase governmental expenditures by the amount of the internal service fund's operating income or deficit. And this is going to be accomplished by debiting that position and crediting general government expenditures. And obviously this is the case in which we were actually going to reduce the governmental expenditures, hence the credit to general government expenditures. Recall on this little bulletin here, the reduce or increase governmental expenditures by the amount of the internal service fund operating income deficit. If you recall, we discussed earlier in this semester how if there's the expenditures are overstated within the general fund of the government, and it's going to mean that there's going to be an operating income from operating activities on this internal service fund. And what that actually means is that they've actually, if there's a profit when we need to reduce the expenditures, which is the case in this journal entry, it means that they've actually overcharged the actual government. So it's actually overstating the true cost of what it costs to actually operate that government. So that's why we actually want to reduce those expenditures, because we've actually billed or charged the general fund too much. That's why their expenditures are actually too high, and there is an operating profit. So if you recall when we spoke about that earlier in the semester, this is the entry that relates to that issue. So next, we want to eliminate interfund activities between the internal service fund and other funds represented within governmental activities. So then that'll be accomplished by debiting that position and crediting transfers in. And this, as we see here, this little note down here, this will be eliminated against our transfers out. Okay, so one other thing I just want to get to right here for the worksheet entries for internal service funds. Obviously, these are going to be pulled off of a particular statement. So let's take a look at this statement here. Find it here. Okay. So Village of Riverside Internal Service Fund, okay, condensed statement of revenues, expenses, and changes in fund net position. So we'll go to the actual internal service funds, condensed statement of revenues, expenses, and changes in fund net position. This is condensed here, so obviously meaning operating revenues. We've just summed them all together, and this is just the end number. So the footnote here. So obviously within operating revenues we would have property or whatever the relative revenue would be. So this is the condensed statement here. The whole point of showing you this is, you can see we have operating revenues, operating expenses. Remember, we have to separate operating income from that of non-operating revenues because of the purpose of the reconciliation on the statement of cash flows on proprietary funds. So if you recall the outlay of this statement, it should be familiar to you. Like I said, here's your operating income, your non-operating revenues, expenses, incomes before contribution transfers in, and then the all-inclusive approach at the bottom here that we're so familiar with now, with the change in that position and the position at January 1 and that position at December 31st. And once again, that's the all-inclusive approach there with the reconciliation at the foot of the statement. But for here, the main thing I want to point out is just know that this is the internal service funds statement of revenues, expenses, and changes in fund net position. I just want to show you they correlate or correspond directly with what we're doing here for these worksheet entries. So obviously the assets and liabilities. Let's start down here. Income of the internal service fund with entities external to the governmental activities should be brought into the statement of activities. Once again, most commonly this is interest expense or investment income. Once again, let's look at this little thing here. This represents income earned from external entities. So the non-operating revenues, we can see here, interest revenue. So that's going to be the interest revenue earned from external entities. That's what it's talking about right here on bullet point number 2, income of the internal service fund with entities external. Okay. Now, bullet point number 3, reduce or increase governmental expenditures by the amount of internal service fund operating income or deficit. Once again, let's look at this condensed statement here. That's going to be the bullet point number 1 right here is going to correspond with bullet point number 3 from slide 15. That is going to be the operating income, and this is going to be operating revenues and expenses relative to income earned from transactions with other government departments. So in this case, we have charged our actual general government, our internal government, $4,500 too much. So within the general fund, it's going to be overstated. The expenditures are going to be overstated, meaning that the true cost of running the government is overstated by $4,500. So once again, bullet point number 1, this amount of operating income right here relates to number 3 right here. Lastly, bullet point number 4, eliminate interfund activities between the internal service fund and other funds represented within governmental activities. Once again, the point on the statement in which that is relevant is on the transfer section. In this case, transfers in of $596,000. This is an interfund transfer. The general fund has a corresponding transfer out. So that's what we're talking about as far as concerning entry 4 right here with eliminating interfund activities between the internal service fund and other funds represented within governmental activities. And once again, these are the relative journal entries to accomplish these sets of data right here. And once again, just one more time looking at the statement. This is the statement in which we're going to actually see this data being pulled from. And once again, that is the internal service fund statement of revenues, expenses, and changes in fund net position. This is just showing you where those relative points are on that statement to pull from. So next we have our government-wide statements. There's only 2 statements here. First being the statement of net position. The second one being the statement of activity. And if you notice here at the bottom, it says there is no cash flow statement. So only two statements for a government-wide statement. Statement of net position, which is like a balance sheet, and the statement of activity, which it acts as the income statement or the profit and loss. Okay. Government-wide statements. Let's start with the statement of net position. Once again, this is like a balance sheet for the government. Separate columns are presented for government and business type activities. Statements are consolidated within columns, so meaning the statements of the governmental funds are going to be consolidated within the column of the governmental activities column. Same for the business type activities if there are numerous enterprise funds. We'd have another column for component units if the government has any discretely presented. So remember, if within anything, if they have control or whatever constitutes government having a component unit, if they have that component unit, they would have another column there. The government activities column includes government type funds and most internal service funds. And just to point out here, fiduciary assets and liabilities are not going to be included in this governmental wide statements because they're not our funds, the government's funds. We're merely holding them in a fiduciary capacity, and in other words, as a trustee. So these fiduciary assets and liabilities will not be included, only at the fund level, not the government wide level. So while we're on the statement of net position, let's go ahead and just actually take a look at it here. Bear with me here because it's actually cut in half. So Village of Riverside statement of net position, December 31st, 2020, okay? So obviously this is the first half starting with the assets, okay? So we can see on the left here, we're going to have our elements starting with assets, and then the relative assets, whether it be cash, investments, interest receivable, so on and so forth. And then notice here the columns here. Remember how it says here that the separate columns are presented for government and business type activities. Once again, governmental activities, business activities. And then we have the total, which moving left to right, we can see the sum of these two activities, business type and governmental, gives the total of this. And so on and so forth. So what we'll do is just list the relative assets and other elements for the governmental activities and business type activities just straight down in each of the columns. Remember that these are consolidated amounts. Remember, statements are consolidated within columns. So all these assets right here, all the cash right here is all the cash from all of your relative governmental funds that the government has, and most of the assets from that of the internal service fund. Because remember, internal service funds are included within governmental activities. So we see that. So let's go ahead and just remember these columns here. We'll get to the second half of this statement here. Okay, here we see here, this is still the assets section, obviously, with the due from state government, due from governmental activities. So let's just look here. We still got our columns here and then the total. One other thing here I wanted to show out, how it says it would have another column for component units if the government has any discretely presented. So what that's saying here is there would just be a title, another column here in between the business type and the total column for component units, and it would just have just another column just for the actual component units elements that are included within that component unit. Let's see here. So that's pretty much it on this. So you're going to see these assets and liabilities in the net position all included within this statement here. And once again, remember, it works from left to right. So first of all, we have the two columns: governmental activities, business type activities, and then the total column. We would have a component unit, or I'm sorry, the the component unit column if that was relative to this government. And obviously down here, I want to point out as well the net position. Let's talk about this net position for a second, because we know net position for proprietary funds is broken into three different columns, right? We have net investment in capital assets, restricted and unrestricted. The net investment in capital assets is going to be your capital assets less your depreciation, less any outstanding debt that relates to the acquisition of those capital assets. So that's what's going to be the net investment in capital assets. In this case, it's capital assets, and this, you can see here, is already net of depreciation. So the only thing we have to take out now is that of the general obligation bonds here, and actually as well the advance from business type activities, because this is relating to the use of these funds are related to the use of purchasing capital assets. So that's why we're going to back this out as well. So that's going to be the net investment in capital assets. The restricted is going to come from those outside covenants, from outside covenants from donors or upper level governments, and then the unrestricted is going to be a plug. Same, and this is obviously for governmental activities, and this is going to be relative to business type activities. So let's see here. Now I'm gonna take you now to a slide that's actually going to show you how we actually get this amount right here. So this is actually, if you can see here, these numbers here directly relate to what was the total net position for the net investment in capital assets, restricted and unrestricted, and total for the governmental funds. Once again, we can look over here and see that is the case here. So 35, 612, 857, 37. And we can see that holds true. 35, 612, 857, 37. So those are our amounts. And once again, this is how we get the net investment in capital assets. So when we're going about setting up, trying to build this net position as part of the statement, this is the easiest way to go about it, is to build this little chart here. So start with net investment in capital assets. Once again, we have our capital assets here, total amount of capital assets, less the accumulated depreciation, less bonds payable plus the premium. In the case of the Village of Riverside, there was a premium, and this debt related to the acquisition of capital assets, and then also less the advance from the enterprise fund, only because this is tied to the construction or the purchase of capital assets. That's why it's related in the net investment in capital assets. And we just carry these down, take back these out from this, and it'll give us 35,930,200. For the restricted, we see here we have the permanent fund principal. Remember, that's the corpus of the permanent fund, which has to be held intact indefinitely. So that's the 300 there. Restricted for public works, 75,000, and restricted for road repair, 237. So there's our restricted. Remember, the unrestricted is a plug. We already know what the total net position is because it's assets minus liability. So that'll give us our total net position. So we know what the total is, and we already know what the net investment in capital assets is and the restricted is. So we can add the net investment in capital assets with the restricted assets, and then take that away from what the total is, and that's going to give us our plug of what the unrestricted net position is right here with the 857,490. So that's our little outlay here, our little chart for pulling together the components of net position, whether it's restricted, unrestricted, or if it's a net investment in capital assets. And once again, that relates directly to the bottom portion, which is the net position of the governmental activities. And I want to point one other thing out to everybody. For the business activities, a nice thing about bringing these proprietary funds onto these government watch statements is they operate on the accrual basis of accounting, which is the same basis that the government watch statements operate on. So therefore, we can just directly pull these amounts right off the statement of net position, and also off of the statement of revenues, expenses, and changes in fund balances, and changes in that position. We could pull that directly for the business type activities for the enterprise funds. However, the governmental activities, These amounts right here are going to be pulled off that worksheet after we've went through that worksheet process with those worksheet entries we went through on Wednesday for the long-term debt and for the capital assets and those other entries, and also combined with the internal service fund entries that we just went through with that worksheet approach as well. If you recall, that's one big worksheet. But that the as if we had been operating on the accrual column to the far right of that worksheet, that's the column we use for placing governmental activities on both the statement of net position and the statement of activities. I know that's a lot thrown at you right now, but I'm going to pull up that whole worksheet that ties in every entry we made so far for this chapter. So it should make sense when we look at that. So there's the statement of net position, the government-wide statement of net position. Remember, governmental activities column, business type activities column, total column. If there was a component unit for the government, there would be another discretely presented another column here. And now on the left we have the elements, meaning assets, liabilities, and net position, and list them directly into the relative columns. Governmental activities include governmental funds and most internal service funds. Business type activities is your enterprise funds, your for-profit funds. These are on accrual basis at the fund level, so we enter them directly in. These are modified accrual plus internal service funds, which there are differences between internal service funds on placing them in, so they have to go through the worksheet entry as well. These are entered directly off the right side of the worksheet on the as-if column. Like I said, we'll get to it. Net position, you know how to break that down between net investment and capital assets, restricted, unrestricted, to get the total net position breakdown with that relative schedule that we've seen for going about calculating these components here. And then obviously at the right we have the total working from left to right. So there's the statement of net position for the government-wide statements. Next, let's get down to the government-wide statement of activities. So on the statement of activities, for the government-wide statement of activities, we're going to have a net cost approach. So what do we mean by this net cost approach? We're going to actually start with functional expenses less allocable program revenues, which is going to in turn show us what the net cost is for each of those relative programs. From the net cost, we add general revenues, special items, and transfers to show the overall change in net position for governmental and business type activities. The change plus beginning net position equals ending net position, and this should agree with the statement of net position. So once again, these two statements have to agree with one another with what that change in net position is, or the ending balance. So let's go ahead and take a look at this statement as well here. Okay, just give me a second here. Okay. So, Village of Riverside Statement of Activities for the year ended December 31st, 2020. There's the title of the Statement of Activities. Once again, this is the government-wide Statement of Activities. So let's go ahead and see here what we said. It says it's the net cost approach. So it says it's going to start with functional expenses less allocable program revenues, which shows net cost. So let's take a look at how we do this net cost approach. So we see here on the left, we have the functions and programs, right? For governmental activities, we got the list of those relative activities for total government activities. Then we have business type activities. In this case, we only had the water utility fund here. So that's the total government, right? Between governmental activities, business type activities, total government. Next, like you said, it starts with expenses, right? It starts with the functional expenses. Here's the functions, right? And here's the relative expenses. So it starts with the functional expenses. So here's, say, general government expenses was $805,500, public safety $2,139,500, so on and so forth. The relative functional programs and expenses for both governmental activities and business activities. There's the relative expense or the functional expense, right? So then it says we less the allocable program revenues, which shows net cost. So see here, moving from left to right, we start with expenses, And then we have program revenues. Well, there's three different element or components of program revenues. We have charges for services, operating grants and contributions, and capital grants and contributions. So obviously, we just go on, so on and so forth. So for Parks and Recreation, they had charges for services of $100,000 within the period. Operating grants and contributions, because remember, contributions can come in the form of operating grants and contributions or capital grants and contributions. Obviously, operating grants and contributions come in the form of for this just the actual operations, the daily operations or the general functions of the government, whereas the capital grants and contributions obviously relate to capital acquisitions with sewages, sewers, and bridges, buildings, sidewalks, whatever they might be. So capital assets. We already know the difference between that. But anyways, these program revenues, the whatever component of revenue it is just tied directly to the actual function. So operating grants and contributions. Obviously, there was $350,000 given for public safety. So probably for the either the fire department or for your police. Another $350,000 for public works, so that could be once again for whatever the public works would be. Well, let's say if it's a fire department, or for example, or another police thing. Capital grants and contributions, $600,000, so that's for public safety. Maybe they're building a new fire department or a new police station. So you get the point here. Cemetery. This is the $300,000 of the capital grants and contributions that was made throughout the year, which is obviously going to be that corpus, right? So that's how we go about it. So there's the function program for the governmental activities and the business type activities. Like we say, we start with the functional expense and then we back out the program revenues. So it's simple. You just plug in the expenses with the relative program, and same thing with whatever type of revenue it was. You just punch that in with the actual relative program or function. So then once again, we can see that this column here moving to the right, because what we want to get to is the net expense. So the net expense, this last column, revenue and changes in net position. You can see here we have the first column is governmental activities, and the next column is business activities, and followed by the total. So obviously governmental activities, you notice here for governmental activities, it all relates. These slots are filled, right? Because if you notice, these are all governmental activities. That's why you're not seeing anything for business type activities here. But then if you look below this threshold, there's nothing here for governmental activities for the net expense, but there is for business type activities, obviously, because this is the business type activities section. So for the net expense, obviously for general government, if we have the expense of $805,500 and we back out program revenues, which there were none relative to the general government, so the net expense is $805,500. So what this means is this is going to be general government's pretty much financed all on tax revenue, all on tax money, because there's no other program revenues to lessen the burden on the taxes. So we can see here for public safety, the expenses was $2,139,500, but we also had some program revenues relative to it, $950,000 worth if we sum these two together. And so obviously the net expense for that is going to be this less these two items will give us this. Same thing for governmental or for business type activities. We have the expense, charges for service, the capital contributions. So this backing out these obviously will give us these right here. And then obviously, moving from left to right is how we get the total column. And you'll notice that these are going to be the same, because from here, there's nothing that enters into determination before it gets to here. Same here. So that's the top portion of this statement of activities here with the net cost approach. So once again, we started with functional expenses. Here's the function. Here's the expense for governmental and business type activities. And then we less allocable program revenues. Program revenues, remember there's three different types of them. And the relative program revenues for what type of revenue it was and what function it corresponds or relates to. Then from that, we know from that we have the net cost. So once again, net expense or net cost, revenue and changes in net position. We have both columns for the different types of activities, and then the total. And obviously we sum this from moving left to right and then down. So that's the top part of this statement. Let's go ahead and look at the bottom part of it. Okay. So it says from the net cost, add general revenues, special items, and transfers to show the overall change in net position for governmental and business type activities. Okay, so from net cost, add general revenues. So this is the bottom half of this. So, all right, the first half of it is going to obviously is going to tie in directly to where this is right here. Program revenues, we see this functional programs, so it's showing you this up top. So we have all this, right? So then from there, with those sums that we had from the previous slide we just looked at, the top half of this statement, the bottom half, we add these general revenues. So from these items right here, flip this again, sorry. So from this right here, these amounts here, we're going to be working off these and tailoring down where this next slide is. Okay, so general revenues. So we know general revenues are going to be our taxes, and that's property taxes, motor fuel taxes, sales taxes, interest and penalties on taxes, all of these, license permits, fines, and forfeits. So all the general revenues that we've talked about already throughout this class is going to be tied in general revenues here at the bottom. So we're going to add those to the general government, right? Governmental activities, and then the business type activities. And remember here it says that these are general revenues from net costs, add general revenues, special items, and transfers to show the overall change in net position from governmental and business type activities. So obviously here's the general revenues, right, all the way down to here. So here's adding the general revenues. Then we have special items, gain on sale of the parkland right here. Transfers, we have 200,000. So obviously the enterprise fund is transferred 200,000 into the one of the governmental activity funds here. Total revenue, special items, and transfers. So if we add these together, we have this amount here. Change in net position. So if we take the sum from the one up top, the net cost of those programs, and then add in the general revenues and special items and transfers, we'll get this. And then obviously take that gives us a change in net position. Here's net position beginning, net position ending. So once again, this is the all-inclusive approach. Remember these right here for governmental activities. Let's watch this. A net position ending 37,400, 190. Let's take a look at this. $37,400, 190. Business type activities. Total net position 1,582, 720. 1,582, 720. So we can see here these numbers, the net position ending have to correspond with that on the statement of net position as well. So for the statement of activities, once again, start at the net cost approach, as we said. Net cost approach, which is start with functional expenses. Now we add in the allocable program revenues, which shows net cost. From the net cost, add general revenues, which we see special items and transfers to show overall change in net position. Governmental business activities, and then like I said here, change plus net position equals the ending net position, and this should agree with the statement of net position, which we just showed that was true, that these items do correspond and do match what it says on the statement of net position. So there's your two government-wide statements, your statement of activities and your statement of net position, the format and how you go about building them. So let's see here. Okay, let's go ahead, and I think from here we can just run through the rest of these slides, and we should be good to go. And I'll show another example or two on the reconciliation, and we should be good. Actually, hold on, back. I want to show you the actual overall worksheet now that we've went through. So we went through. Let me go ahead and hold up, and then I'll just start talking. Okay, just give me a second. See if I can go back and forth here. Okay, let's just look here. So here's our total worksheet here. Obviously, here's the top half, second half. So this is the worksheet here. Let me just tell you where I'm at. PowerPoint. So this worksheet here. Notice here the worksheet approach. Remember we went through first the adjustments and eliminations. Starting here, let's just go here. Enter amounts from the governmental fund basis statements here. So here's the governmental fund basis, right? We see we have debits, total debits, and then we'll start at the top both places. But you'll see here debits. We'll have total debits then total credits, right? Then from this point, we're going to move to the right. And this, remember, these are governmental fund balances, just pulling the debits and credits directly off those governmental fund balances. Here, these are the adjustments, the worksheet entries that we went over with related to the capital assets and the long-term debt and the other adjustments. Those are going to be entered into this column here, just directly related. And like I said, we'll go through it here in a minute. And then the internal service funds, these are the ones we actually just went through today. They're going to enter into this column here. Then once again, we just move from left to right to have the balances on the government-wide statements. And if you recall from Wednesday's lecture, how we move from left to right on the worksheet approach for the as if it had been on there, we take the net effect of the governmental entries that were made on the GL that we take from entering here, and then the effect of the worksheet entries, and the effects of both of these entries is going to affect what's over here. And really, it's the effect of all three of these entries is what's going to affect over here. But it's the same way as the way that this stuff moves from left to right. And only certain elements, certain debits and credits are going to carry over because some are going to wash out and the accounts are going to be eliminated. And if you're having trouble with that, just refer back to part 1 of chapter 8's lecture. So this is the chart that I'm about to take you to. Recall, these are the entries we went over on Wednesday. These are the entries we went over today. So let's just take a look at this chart here. So as you can see, here's the top part. We start with debits. We have our assets, and we have expenditures, other expenditures and expenses, other financing uses, transfers out, total debits. Then the bottom half of this statement, we have credits. Our liabilities, our revenues, other financing sources, and special items. Net position, total credits. Okay, so let's just see here. And I'm not going to go through this whole thing. I'm just going to show an example or two, and then you all can work through this on your own time. I just want to point a few things out to you. See here, like we said before on that sheet, this is just all your debits and credits for governmental fund balances here. So we're going to enter these directly off those statements, right? Not hard. These right here, these adjustments, eliminations, these are those entries we went through, the worksheet entries on Wednesday for long-term debt, capital assets, and other adjustments as well concerning revenue differences between the modified accrual and accrual. So we're going to take these entries. So let's say, for example, entry 1, where we can recall entry 1 is where we actually put on the capital assets. So we can see here, here's the capital assets coming on. Where's another entry for entry 1? The relative accumulated depreciation coming in, and obviously know that they've summed all these together. They're not breaking it down by the actual relative depreciation that's tied to all of them. This is just for all accumulated depreciation for all fixed assets. So there's that. Another part of entry 1. And then right here, net position beginning of the year. Remember, it had the net position entry. We're recording the capital assets at net, right? So that's why we're seeing that. Once again, we see entry 1, we debited our capital assets, so we're debiting them here. Crediting accumulated depreciation here for entry 1. You can see it's marked here on the credit. And then once again, we credited net position for the plug right here. And pretty much so on and so forth. I mean, it's pretty straightforward on how this thing actually works. For entry 2 that we had for as far as relieving expenditures, remember we have to get rid of expenditures. If you can see here, entry 2, we recorded capital assets and reduced expenditures because on the governmental funds we record expenditures, whereas we actually record capital assets on accrual. So this is where we debited the capital assets for entry 2 here. We debited the interest, debt service interest. Remember the interest expense because we cannot capitalize it. If you relate back to the last lecture, remember GASB prohibits capitaling interest during the construction of those capital assets. So we incurred that interest expense here. And then entry 2 here, the capital outlay, that reverses that expenditure here. So we can see we have an expenditure here. So at the end, remember, see here the net effect of this and this, getting rid of the actual capital outlay. It'll be nothing, zero, summed away here on the actual balances for government-wide statements. So you can see how we move left to right. And that's how you go about entering these entries into this statement. You just, or this worksheet here, you take the relative entry, like I said, for entry 1, we recorded the capital assets and the accumulated depreciation and the change in net position. There, like I said, there's the capital asset. That's just the sum of all those capital assets that were debited in entry 1. And then once again, the accumulated depreciation, that's the sum of all the accumulated depreciation that we had from entry 1. That's marked here. And the same thing with net position from entry 1. Remember, we credited it for the plug that right here. Same thing for entry 2, like we just said, we recorded capital assets. That was the debit. We record it here in capital assets. We incurred the interest expense, so we're just plugging it in here. It's pretty simple. We've done all the hard work at this point. We just plug it in and then move left to right to see the net effect. So we go forward with all those worksheet adjustments that we did. Like I said, the entries are made, so you're just now placing the entries where they belong on this worksheet. Once again, this column here is for the long-term capital assets. For your long-term debt and your other entries relative to the difference between revenue recognition and expenses and accruals. And then once again, this column here, same thing that I just described here, how entries 1 and 2 worked, same thing for the relative entries that we had on the worksheet for the internal service funds. You just merely plug them in here. Like I said, the hard part's done. You're just plugging them in on this worksheet and moving left to right. One thing I do want to say, this column here, after we go through these worksheet approaches from the governmental fund balances off modified accrual and all the way over to here to the as if we were on the accrual basis, for the governmental activities column, this column here is where we're going to pull the amounts for building the statement of net position and the statement of activity. So for governmental activities, these amounts are going to pull directly off the statement here that I'm showing you. Okay, so let's see here. So see here, due from state government. On this side here, 185,000. We can see here, due from state government, 185,000. Let's just look at one more here, just so we can get an idea here. So cash, 728 on the governmental fund balances, but we can see here there's a change in cash because of the internal service funds. We have to include those. So that's going to make it go up. If we add the 3,500 to the 728,000, it's going to be 731,500. So let's go back here to our statement here for cash. It's going to be back on the top here. Cash, 731,500. Cash, 731,500. So we're pulling these numbers off the as if column as if it was presented on the accrual basis. Obviously, that's the entire point of going through this worksheet, because this is how we go from modified accrual to the actual accrual basis. Because once again, recall, governmental funds operate on a modified accrual basis of accounting, where they're only concerned with the current financial resource measurement focus, whereas the government-wide statements operate on the accrual basis, which is the economic resource measurement focus. So it's an all-inclusive approach, right? So we're worried about everything. So we're going from modified accrual to accrual. So there's the worksheet approach. Once again, we enter those directly in on those statements. So it's it's good to remember we use this column off this worksheet from the worksheet entries from both the long-term debt, long-term capital assets, the changes in revenues and expenses between modified accrual and accrual, and the entries from the internal service left to right. This is the column we use to build our government-wide statement of net position, statement of activities for governmental activities, because it includes both governmental funds and internal service funds. So we're going to use this column. And remember, for the business-like activities, we're pulling verbatim off the column of the statement of revenues, expenses, and changes in fund net position, and the statement of net position for the enterprise funds, because they both operate on accrual. So that's nice. So let's see here. Let's go next. Now we have a couple other things that we actually have to account for. So the reconciliation of governmental fund balances to government-wide net position starts with government fund balances, summarizes all the changes made to get entity-wide governmental activities net position. So once again, we start with governmental fund balances, summarize all the changes made to get to entity-wide government net position. Obviously, the changes that are going to be included in this reconciliation are changes that we already accounted for within these worksheet approaches. Now we're just given a map or a key to those users, so they see what those changes are that we adjusted to go from one basis of accounting to the next. So obviously we had the addition of long-term assets. From there we add in the inclusion of the internal service funds assets and liabilities, and that's usually a positive there. We also have to add in the handling of deferred revenue as revenue instead of as a liability, and the addition of long-term liabilities. Okay, so let's take a look at this. So this is the reconciliation, once again, of governmental fund balances to government-wide net position. So let's look at this reconciliation here. Okay, statement of net position. That's what I need here. Okay, so, and I'm not gonna go through this whole thing here. I'm just gonna give you a general idea. So start with governmental fund balances. Fund balances reported in the governmental fund balance sheet. So there's our fund balances in the governmental fund balance sheet. So amounts reported in governmental activities in the statement of net position are different because, once again, remember it says addition of long-term assets, capital assets used in governmental activities are not financial resources and therefore are not reported in the funds. So we add those back. Same thing, inclusion of internal service funds assets and liabilities. Here we go. Internal service funds are used by management to charge the cost of certain activities to individual funds. The assets and liabilities of internal service funds are going to be included in governmental funds in the statement of net position, so we have to add those in. Once again, handling of deferred revenues as revenue instead of as a liability. Deferred revenue for property taxes is reported in the funds but accrued as revenue in the government-wide statements and added to net position, so we add that back in. And lastly, addition of long-term liabilities. We can see the last point here, long-term liabilities, including bonds payable, are not due and payable in the current period and therefore are not reported in the funds. So we back that out. So once again, these are the amounts here that the actual the parts of the statements are the elements that actually change the balances reported from governmental funds to those in the net position of governmental activities. So this is the reconciliation, and it's important to note that this reconciliation has to be presented either at the bottom of the face of the statement of these governmental funds, or they have to be presented in a notes following directly after that statement. So this reconciliation has to be included. Once again, this is the changes that we accounted for. We're just showing it. We're just reconciling it now. So just pretty much tying in what we did so the users understand how we went from one basis to the other and why one basis was different than the other. And once again, this is for the statement of net position here. We also have to do an activity statement reconciliation. This reconciles changes in fund balances to changes in net position for the governmental activities. It also shows differences in accrual versus modified accrual. Some examples is excess depreciation over capital outlay expenditures, gain loss on sale of assets versus proceeds, deferred revenue items treated as revenue under accrual, differences in bond proceeds and retirements, net internal service fund profit from governmental funds, and bond premium amortization. So let's look at here one more time, and this is the activity statement reconciliation. Okay, statement of activity, same thing. Like I said, I read through the last one for statement of net position, but pretty much same thing we need to go through here. Net changes in fund balances, total governmental funds. Amounts reported for government activities and statement of activities are different because, so same thing we just went through here. Excess depreciation over capital outlay expenditures. I'll just read the first one. Governmental funds report capital outlays as expenditures. However, in the statement of activities, the cost of those assets is allocated over their estimated useful lives as depreciation expense. This is the amount by which depreciation exceeded capital outlays in the current period. 326,500, and it shows you even the relative journal entries that tie to these statements. So the same thing, just each bullet point is going to go through and show you verbatim on the statement. My whole point is I just want you to see these statements other than just it on a slide, because it always helps to get a visual of what we're trying to go about accomplishing. So there's this reconciliation on that one for statement of activities. So obviously for both statements we have from the governmental funds, we have to be able to reconcile the differences, and those are just the differences, like I said, that we've already accounted for within the worksheet. We're just presenting those to the users now in a reconciliation. So let's get down next into capital assets, how we record and keep record of these capital assets. It says that there's actually no specific method of keeping track of long-term assets by GASB, but obviously there needs to be some type of records. So we need to keep records that keep track of the actual cost, the location, and life of all the fixed assets in order to support amounts reported in the government-wide statement. So they're just saying here they're not gonna nitpick us and micromanage us on how we keep the records of these capital assets, but they're saying we do need to have some type of record, and within these records we need to keep the cost, location, and the actual life expectancy of these fixed assets. Historically, this was accomplished in the general fixed asset account group, and this general fixed asset account group is merely an account group of a listing of balances of capital assets. Capital assets collections. So within the collections of capital assets, the government could have plant, infrastructure, and equipment. These I think we're familiar with. We've talked about them a lot throughout this whole course, and it's also stuff that we see in for-profit. So the plant, infrastructure, and equipment need to be recorded as an asset, and they are subject to depreciation, so they need to be depreciated. Land is recorded as an asset, but we do not depreciate. Once again, remember, land is one of those fixed assets, the only fixed asset that is unique in which how it's presented on the balance sheet or how it's carried. Remember, it's carried at historical cost, so it's not adjusted for inflation or anything of that fact that it's not depreciated or adjusted for inflation. So it's carried at historical cost. Same here. Holds true for GASB as it does for FASB, so we do not depreciate land. Collections, this is stuff is like art or stuff of that sort, like from a museum, a piece of art or something, a piece of equipment, something. But so collection stuff of that sort, it needs to be reported as an expense if not capitalized. So you have two options. Your collections, you can either expense them or capitalize them. But they must be held for public exhibit, education, or research. They need to be protected, and proceeds of any sale must be put back into other collections. Okay, capital assets, infrastructure. So examples include roads, bridges, drainage systems, sewer systems, dams, and lighting. Capitalization was going to be optional before GASB 34. But once capitalized, governments may depreciate or use the modified approach, which does not require depreciation if assets are adequately maintained. Remember, we discussed the modified approach previously in this course a couple chapters ago. So we should be familiar with it, but let's take another little glance at it here just to make sure. So the modified approach to infrastructure accounting, we have a couple of thresholds we have to meet. in order to be able to qualify for the modified approach. So, in order for a government to qualify for the modified approach to infrastructure accounting, the government must maintain an inventory of infrastructure. They have to do a condition assessment every 3 years. They have to estimate the annual cost to maintain it at a target level. And they also have to keep documentation that the target maintenance level is being adhered to or being met. Under the modified approach, the cost of maintaining is going to be charged to expense rather than taking depreciation. It's important to note that whether you're going to be capitalizing, whether you're going to be doing the modified approach or just your normal depreciation of these capital assets, the infrastructure, the cost to extend the life of existing assets is going to be charged to expense rather than capitalized under either option. So I know that's a little different than we're used to for profit. If it increases the life of the asset, they extend the life of the asset, any cost is usually capitalized. But here GASB's telling us that we need to expense that and rather than capitalize it, and that's under either option, whether you're going to depreciate it or do the modified approach. Long-term debt, the most common types are most general obligation bonds. Remember, that's backed by the full taxing authority of that of the government. It's not a revenue bond, but an actual general obligation bond. Long-term lease obligation amounts. So then once again, the capital leases. Compensated absent amounts. Claims and judgments, so contingencies there, and landfill closure liabilities. So we've already went through the post closure liabilities of operating a landfill. So that's what they're talking about there. So the record keeping of long-term debt, this is a lot like that of the actual fixed assets record keeping. There's really no guidance by GASB on telling us how we have to specifically handle the record keeping of the long-term debt. But they have the similar rules, similar to capital assets. Some record must be maintained of the balances and changes to long-term liabilities. Once again, historically, this was accomplished in the general long-term debt account group. And once again, that was just an account group, which was just a listing of the balances of long-term liabilities. So pretty much the historical approach for both the record keeping of the assets and the long-term debt was done in the actual account group, meaning there was a general long-term debt account group and then a general fixed asset account group, which, like it says, is just merely a listing of the balances of the relative assets or debt. Some additional reporting that's required for long-term debt. We have the schedule of changes in long-term debt, which is going to show the difference in new debt versus the amount that's been paid off. We also need the schedule of debt service requirements to maturity. This schedule is really important because it helps the users see any future ballooning of debt service that could ultimately require a tax increase. So it's good to know because users can actually see if governments are in fiscal distress and need to actually up their taxes to be able to actually to meet this debt service requirements. Computation of legal debt margins. So this is going to show additional debt that can be legally issued. That's why it's important for governments to keep a strong hold on their debt, because there is an actual legal debt margin in which you can't consume any more debt because it would just implode from within. You just can't do it. You'd never be able to pay it off. So we need to keep that computation of the legal debt margin. We also need a schedule of direct and overlapping debt, and this helps citizens see their total debt obligation. So just a little bit on that additional reporting. This does tie up or wrap up, Chapter 8. I know this is probably, not probably, this is the most difficult chapter, and in my opinion, that we've seen this far. I do expect some questions, like I said, from Wednesday's lecture. If not, I understand, but I just want to let everyone know I'm here, I'm available. I hope this chapter makes sense to everybody. I believe it does. If you read the chapter and do your homework with it and really pay attention to these lectures and put the time in, I think you'll understand it. So that's it for Chapter 8. And like I said, next week we'll be getting into Chapter 9 and starting Chapter 10. So be on the lookout for that. Remember that this Sunday we have the Chapter 8 Connect Assignments due. So once again, as I said, the second part of the lecture is up. So That still leaves you over 48 hours before it's due, because it's not due till 11:59 on Sunday. So make sure to get those Chapter 8 assignments in on Connect, and please reach out to me if you have any questions or concerns relating to anything to the course. Like I said, I'll be more than happy to help in any way that I can. So good luck with your homework, and once again, reach out if you need me. Stay safe out there, and we'll reconvene with Chapter 9 next week. Everyone have a good weekend. Thank you.